In this next chapter, we're going to be looking at the issue of housing and the institutional practice of residential segregation. We'll be examining how that practice impacts people's life opportunities. We're going to be discussing the issue of housing in this chapter and the policies and beliefs that have contributed to residential segregation over time, and what kinds of institutional discrimination exists today. When we think about where people live, that not only impacts their opportunities, their way of life, and what kind of world in which they're socialized, but it is also, for many people, the only kind of wealth that they have. Where you live in the U.S. isn't just a matter of preference. It's about providing for the future. The question this then begs is whether everyone has the same access to home ownership, good schools, and resources. Residential segregation is the grouping of people in residential areas by a defining characteristic such as age, socioeconomic status, religion, race, or ethnicity. It's referring to communities that tend to be more alike, rather than having a great deal of diversity. It's not unusual for this to happen. Racial residential segregation is also referring to systematic oppression that's responsible for the construction of the urban underclass by physically separating communities according to race and by diminishing the social and economic success of non-whites in the United States. It restricts people's ability to access better and different neighborhoods. It's seen by many sociologists to be one of the main reasons that an urban underclass exists, and it locks people into communities where they cannot access jobs, making them reliant on welfare, and locks children into neighborhoods with underperforming schools. Often these neighborhoods are racially segregated with high levels of poverty. Those confined and restricted to those areas have little ability to improve their socioeconomic conditions. We know that blacks are more likely to experience residential segregation than any other group. Racial residential segregation is not limited to blacks, though. Latinas are the fastest growing minority in the U.S., in part because of the need for labor in rural industries and agriculture. Because of this pattern, Latinos' presence has increased dramatically in the past several decades in rural communities. This occurs in what are known as micropolitan areas, where there tends to be a high level of racial residential segregation for Latinas. When the term micropolitan area is used, it's referring to a community where the urban core is between 10,000 and 50,000 people. The more a community's urban core declines, the more likely there will be low housing available due to the lack of upper-end buyers in the area. However, when low housing opens up, it also means that the core economic center of an area is in decline. There were several critical points in housing policies that have shaped minorities' opportunities in the housing area over the last 150 years. In 1862 and 1866, the U.S. government passed the Homestead Act. The Homestead Act of 1892 was signed into law by President Abraham Lincoln. Its main purpose was to increase Western migration by providing settlers 160 acres of public land. In exchange, homesteaders paid a small filing fee and were required to complete 5 years of continuous residence before receiving ownership of the land. After 6 months of residency, homesteaders also had the option of purchasing the land from the government for $1.25 an acre. The Homestead Act led to the distribution of 80 million acres of public land by 1900. The Southern Homestead Act of 1866 was enacted to break a cycle of debt during the Reconstruction following the American Civil War. Prior to this act, blacks and whites alike were having trouble buying land. Sharecropping and tenant farming families had become a way of life. This act attempted to solve this by selling land at low prices so that Southerners could buy it. Many people, however, could still not participate because the low prices were still too high for them. blacks were prevented in some southern states from owning land. The law was amended in order to assist blacks to own land, but then the law was repealed in 1876 before much land could be distributed. More turning points occurred in the 1900s. The first of these was the Federal Housing Act of 1934. Its purpose is to make credit more available to lenders for home repairs and construction and to make better housing available to low and moderate income families. Part of the reason it was created was to stop the tide of foreclosures on family homes during the Great Depression. During this time, we see the first use of redlining to support lending money for homes to white neighborhoods. Because white neighborhoods were given higher credit ratings and black neighborhoods, or ones where blacks were starting to move in, were given lower credit scores, many banks would not approve loans to blacks. Those neighborhoods that were seen as high risk were marked in red, hence the name redlining. This prevented blacks from being able to build equity in homes. A decade later, the 1944 GI Bill was passed, which provided for a broad range of laws that would assist veterans returning from World War II. Even though blacks should have been included in the GI Bill home loan benefit, because many subdivisions had restrictive covenants that would not allow blacks to move into the community, they were severely restricted in what neighborhoods they could move into. Additionally, whites generally were allowed to access mortgage insurance programs that would allow them to buy homes over time, whereas blacks could not access these benefits. Redlining has continued over time. Even though it's illegal to engage in that practice, banks and mortgage lenders are still able to get by with it, even though it was outlawed by the Fair Housing Act of 1968. Banks are still doing it, and the U.S. Agency for Housing and Urban Development assesses data regularly, sometimes filing lawsuits against banks that are discovered to be actively engaging in redlining. This timeline gives you a sense of the major laws and policies that have supported racial residential segregation. It started well before the first of the two Homestead Acts. You can see how the land lottery in Georgia advantaged whites and disenfranchised the Native American peoples of that state. By the 1900s, housing developments created racially restricted covenants, which blocked access by non-white citizens. Thus, if a homeowner wanted to sell his home to a non-white person, the restrictive covenant would not allow that person to do so. Then, in 1926, the U.S. Supreme Court said that whites don't have to sell their homes to blacks if they don't want to do so. While the Fair Housing Act was passed in 1968, which supposedly would allow equal access to homes, 20 years later, the Kerner Commission found that U.S. society was becoming an increasingly separate and unequal society. By 1995, underwriters loosened standards to aid lower-income families to buy homes, and then about a decade later, the U.S. housing crisis begins to unfold. A year later, the FDIC, that's the Federal Deposit Insurance Corporation, takes control of IndyMac. IndyMac stands for the Independent National Mortgage Corporation. Before it was seized by the federal government, IndyMac was the largest mortgage lender in California and the 7th largest lender for homes in the U.S. Their failure was the 4th largest failure of a bank in the history of the U.S. As you can see, this is a long history of policies that have disadvantaged minority groups and low-income families during the past 200 years.